and welcome to Chapter 3 homework. Yeah, cruising. For this, we're going to basically get into our analysis of our transactions and basically piece together each of these transactions and what's going on with them according to basically the way the book does. Now, we have 9 transactions on this first one. And we're going to use the following tabular analysis showing an effect of each transaction on the accounting equation. We're going to put explanations for changes to revenue or expense. And then if a transaction causes a decrease in asset, liability, or equity, we must place a negative sign in our parentheses in front of the amount entered for that one that was reduced. Okay, fine. So starting off first, the first transaction, again, we issue shares of common stock to investors in exchange for $145,000. So of course, we know we have 2 accounts, common stock and cash, because again, usually investors go and do it in cash. And we'll just look of how they increase or decrease. Well, cash is going to increase. So we're going to increase that one. And then we got to go find common stock. And common stock also will increase. This is due again to the obligation or the finance of our investors. So obligation basically pay our investors back for the money that they spent on us, or just basically showing how much that the investors own of our assets. Next, we borrowed $48,000 by issuing a note. Okay, well, first off, we didn't use that note to buy anything, so our cash has increased. And then we have a liability. We have a note. Mostly we're going to owe that money back to whoever gave us the note. Hopefully we do. But that's how it will go. So of course our liability increases. We have an obligation. Next, we purchased delivery trucks for $54,000. Well, basically our cash account will go down by the $54,000. Of course, we're purchasing trucks. So that's just like you purchasing your car or supplies. Anytime we purchase, we know our account is going to go down in our bank account. But since we took ownership of another type of asset, we just increase the $5,400. Again, you want to make sure everything stays in balance. So one side should go down, one side should go up if it's all on the same asset or liability and equity. If they're on both different sides of the equal, make sure it's the same number, and everything does stay in balance. It's a neat little thing. Alright, number 4. We received $1,600 from customer for services performed. Okay, first off, we know we received cash of $1,600. Thing is why did we receive the cash now? We didn't get a loan this time. We actually performed services. We earned this money. So right away, again, earning would be a revenue. And then since it is a revenue, we must put in what type. And it was service revenue. Again, we would have the scroll, and you can actually select which one. Only if it's a revenue or expense. Okay? Alright. Number 5. There's 5. purchase supplies on account. Okay, so we know we bought something on account, basically using credit. So we don't have cash, but we do know our ownership and supplies increased, and that would increase our liability. Again, we do have an obligation to pay. Next, we paid rent. So we paid our rent, again cash, and this is going to be an expense. Now for the book, it likes to keep it negative, so we're going to keep it negative right here and state what it is. It is rent expense. There we go. Number 7, we performed services on account. Oh, so we did perform services. We do know we have a revenue, but unfortunately it is on account. Means we pretty much are billing the customer, or we're expected to receive the money. We have yet to receive it. So again, revenue is going up for our service. Okay. 8, we paid salaries of $27,200. Okay. So we know our cash account is going down again. To pay those workers, we need to pay them. And we have an expense. Salary and wages expense. Okay, last one, we pay our dividends. So again, dividend is going down. And then, just like with the expense, we're going to go ahead and put it the same way. Because again, this account, expense and dividends are naturally negative. So 2 negatives are going to make a positive when we do the balance. Okay, now it's time to actually do the balances. So calculator's coming out. Let's clear it all from the last chapter. And we'll go ahead and add and subtract. So 145 plus 4,800. I think we have minus 54,000. Okay. Next, we add the 16,000. Then we subtract out 4,800. Another 27,200. And then finish off with 10 grand. So cash count should have right now an ending balance of 113,000. Okay. We only had one transaction for AR. So that comes down. Same thing with supplies and equipment. Okay. Next, 4,300, 4,800. Revenue, we actually have 2 numbers. Let's go ahead and add those together. Plus 11,600, 27,600, and then we have 27,200 plus 4,800. 32,000, and then 10,000. Okay. I don't think we have to put anything else here. And that's it. Yep. So that's basically it. We're going to make sure both sides are actually in balance real quick, just to be fair. Plus 11,600, 4,300, So again, we have 182,900 assets. Next, we do the exact formula. So 4,300 plus our note payable, 4,800 plus 145 common stock plus our revenue of 27,600. Okay, minus now our expenses of 3,200 minus our dividend of 10,000. Whoop. And yes, we are exactly right. We are good. We can go ahead and submit. And they put a lot of eyes. I guess they could say that we can put zeros here. Yeah, it said also you can include zeros. You don't have to blank it. We blanked it. And you can have negative right here. They are okay with that. But they do want the negative here. Notice there is no I. Okay? So here they are fine with it being positive or negative. Just not actually in the thing. Okay, cool. That's good to know. Okay, question number 2. As it loads. Hopefully it loads. There it goes. Okay. So now we have another analysis. All we have to do now is create these parts of the question must be completed in order. Ooh! So we have to do one before we can do the other. That's actually pretty cool. So let's go ahead and do the income statement. I think this is actually for the month ended now. Let's see. Yeah, for the month of August. Okay, so since it's only dealing in months, this time it actually is the month ended and not the year ended. So again, we're going to find our revenues and know which revenue it is. It's right here on this list is our income statement. So we have revenues of 9,400 for services. Next is our expenses. So we have rent expense of 750. We have salaries of 3,800, and then of course utilities of 500. So our total expense is basically the addition of all three of these again. So 750 plus 3,800 plus 500. So 50-50. Cool. Okay. So net income slash net loss. We have 9,400 minus 50-50 equals 4350. And of course, we must complete this part, submit it before we can go to B. So we submit. Everything is correct. Now let's do B, which is the statement of retained earnings. So again, for the month ended. Now, for this, they actually say for the month of August, it's its first month of operations. Okay, since it's the first month and we always start at the beginning, we have a flat goose egg right now. There's nothing to retain earnings because there's nothing to actually do yet. There's no history. So of course we're going to add again our net income of $43.50 less dividends. I don't think they even issued them. No, they did. $2,600. Wow. First month and already issuing out dividends. Way to go for them. So retained earnings at the end of the month. We take the $43.50 minus $2,600. We're at $1,750. Okay. Again, wants us to submit. We're good, and that means the last part is our balance sheet. Now it looks like they don't want a classified one, which is fine. So all we do is look up our assets. Up here, we have cash, accounts receivable, supplies, and equipment. So cash. Accounts receivable, supplies, and equipment. This is really all we're doing. We're creating the financial statements based on this. So total assets. So cash is, whoa, we have to total this real quick. So we have $14,150 plus or minus $2,800. Okay, minus $650 plus $6,200 minus $1,200. Woo! Minus $2,600. $750. I think it was plus $450. And then finally minus $3,800. Whoop. There we go. So we'll end up with $9,000. Wow. Cash account usually does take a while. So $9,000. Accounts receivable only had two numbers. Basically, we put out a bill. They paid. So they still owe us $2,750. Supplies. We only had the $650. And then equipment, $5,800. Okay, so now let's add them up. 9,000 plus 2,750 plus our 650 and 5,800. 18,200. Okay. Total liabilities. Not total liabilities, just liabilities. We had accounts payable, which is about it. So let's go ahead and calculate. We had 3,000 minus 1,200, and then add on another 500. 2,300. Okay. Next, of course, is our stockholders' equity, common stock, and retained earnings. So we had common stock of 14,150. And retained earnings from previous was $1,750. So total is $1,750. Yeah, $14,150. $15,900. And then make sure you add it to the 2,300 just like before. So right there, we come out to 18,200. Woo, Instagram popping up on that one. I don't know if y'all saw that, but yeah, had Instagram just pop up. And there are deed imbalance. Our assets do match our liabilities and equity. And we can submit it and finish off question number 2. There we go. And that's it for question number 2. Just converting this information into the financial statements. Let's see, question number 3. So we have an analysis of the transactions made. Each change. Okay. Okay, so it wants to determine how much stockholders' equity increased for the month. Okay. First off, let's just go ahead and compute the net income. Let's do C first. Where's A? I actually do not see A. So again, net income, revenue minus our expenses. So 8,000 minus, whoop, we don't need that. 600. Subtract out 4,800. And then 450. 450. So net income was 2,150. Okay. Basically, are we going to increase? Well, yeah. Because all you do, since it's talking about stockholders' equity, it did increase for this month. Because it looks like this is the first month. So all we do basically is take the 1,500, add on our 21,550, and then subtract 1,700. So 15,450. At least that's what I'm figuring, since it's saying stockholders' equity. So yeah, it was 15,450. Nothing really bad there. And again, perfectly good. Just wonder where A is. Just want B, C. It's okay. Says it's all correct. We have everything. Rock on. Number 4, last question. Let's see what's going on here. So this question, again, we have August 1st. Okay, this is our summary. So we've already gone over pretty much everything here. Okay, the only thing that's different is one, you have 2 liabilities. So we do have 2 liabilities that are probably stated out for us. Probably notes and accounts. Yep. But really the first thing you need to do on this one is to take the beginning. Okay, this is the beginning, July 31st balances. So those need to be put in first. So again, for example, cash was $4,000 for me, accounts receivable $7,400, so forth and so on. And then you'll go through each of these transactions. Okay? And overall, does not look too bad. Again, if you have questions, let me know. This one, 9, will give you a little trouble, but I'm going to give you the hint right here because it's kind of like right here with office equipment. First off, we did perform services of $6,050, so that is revenue, but only 3,510 was collected. So we subtract those, and accounts receivable is going to have the remaining that's due. Here, check for how we're paying for this equipment. So August 19th, August 19th has all 3 expenses that happens in that transaction. All of those will have their separate lines. And here we incurred utility expense for the month on account. So that's only in the accounts payable and utility expense. So don't forget when you have a revenue and expense that you need to label. Okay? Or it's already labeled for you. Way to go. So that even gives you more help right there on these transactions. So I think y'all can handle this last one. So that's actually going to be it for this overview video. Again, please let me know if you have any questions or run into any problems. And I will see y'all next time.